Hope you're having a great day out there. We want to thank you so much for joining us and spending part of the day here on Aspire to Retire with Ralph Short, Tim Short, and Scott Earhart of Welcome Home Financial Partners. You can find out more about them at welcomehomefp.com. Made it real easy for you. You click the link right there in the podcast description, take you right there to the website, find out more about them, set up a time to speak with them as well. And as I'm about to do, my name is Chris Swan, and I'm pleased to be joined, as always, by Ralph Short, Tim Short, and Scott Earhart. Gentlemen, always a pleasure. How you doing today?
Good. How are you, sir?
Doing very well, very well. You know, there's a lot going on these days as we're recording right now. Market volatility, always a subject. There's a lot of geopolitical things going on. There is an election. I don't know if people have heard about that or not, but the big news as of right now is the Fed had just done their first interest rate cut in 4 years, and it was pretty aggressive. Instead of a quarter point like a lot of people were predicting, the Fed went with a half-point reduction. Here's JP Morgan's David Kelly on CNBC.
Cutting interest rates at the start doesn't stimulate the economy at all. It actually slows the economy because people begin to anticipate those lower rates, so they want to wait for lower rates. It tells people that the Fed is scared about unemployment. I don't think they really should be, but that's the message it gives, so it undermines confidence. Bringing rates down from a high level is like, bringing a piano down as a flight of stairs. You've got to do it very carefully and very slowly. That would be the right way to do it, and I'm a little worried they've started off in a rush here, but I do think this economy is strong enough to deal with percent, so I think it's still a healthy, strong economy.
Now, of course, in the few days following that first rate cut, the markets, it was business as usual for them, almost as though they had kind of anticipated this because it had been telegraphed for a little while. But here's the thing. There are plenty of rate cuts to come. The Fed has said as much going through next year, going through 2025. So still plenty of uncertainty. What are you telling clients who may be calling up concerned about this?
Well, I think it's gotten so much hype, so much attention that we do have a lot of clients that want to know how this will affect them. And, it's what we're telling them is, or at least what I'm telling people that are talking to me is control what you can control. Let's make sure that we're taking a look at your holdings, at your retirement plan. We can go back and review your retirement roadmap, make sure that everything is working the way that we anticipated it working. I mean, we can't control what the Fed is going to do. Chris, as you just said, they're saying there's going to be, several more rate cuts over the next 18 months. Well, they were also saying that in December of last year, they were projecting 6 rate cuts in 2024. And, the underlying economy said, no, that's not a good idea. Don't do it. So they didn't do it. I mean, we don't know what's going to happen. So my message to every client or person that wants to talk about it with me is let's look at what you can control. Let's look at your personal plan. Let's make sure that even if rates do come down or if rates go up, your plan is going to continue to work for you so you can live the lifestyle you want to live throughout retirement.
I would also say to most people is you've got to have a plan that affects you and you alone. You cannot control what the government does. As somebody famous used to say, the famous lie is, I'm from the government and we're here to help you. To my experience, it's never been a good deal because they're out to help themselves and not the Main Street people that we work with on a daily basis. What is it that most people want? They want to maintain their lifestyle in retirement. How do you do that? Is sit down with people who are fiduciaries, understand what you're trying to accomplish so they can map out your roadmap for you.
Yeah, there's always going to be uncertainty. I mean, the Fed rate cuts are one thing that people have been talking about. Chris, you said it perfectly where they telegraph this, but, there's always going to be uncertainty. And it's important, just like Scott and Ralph are saying, is you've got to make sure that no matter what's going on, you got to make sure your portfolio can sustain the ups and the downs because there's always going to be uncertainty, whether it's rate cuts, whether it's a political change, whatever it looks like, you got to make sure that your portfolio can withstand that.
The financial, the talking heads on television, and I'm aware you guys are on television, so the irony of that, fully aware of it, but they always focus on the national economy or the world economy. And yes, those are important factors. But at the end of the day, Ralph, as you said, you're not necessarily worried about Wall Street, but Main Street, the personal economy of the people out there being concerned with what is going to affect their day to day and knowing, yes, are these rate cuts good for the overall well-being of the economy? Yeah, time will tell, right? The hope is to have that soft landing that they've been talking about for years and years here. But is it going to affect you on a day-to-day basis? That's what's the most important thing. So having a personalized plan for you to withstand these things, as you guys said, being able to control what you can control knowing that, yes, there will be rate cuts in the future. There will be market volatility. Taxation is going to be a factor down the line. Don't know when it's going to happen. Don't know how it's going to happen. But being able to say, if X, then Y, having a plan put in place, having that roadmap put in place is what you guys do for clients and have been doing for clients for, I've said this before, but, combined 60 years just right here on the show of industry experience. And it all starts by reaching out, going to welcomehomefp.com, setting up that time to speak. So if you have concerns about any factor as it goes to the economy, the election, market volatility, what these interest rate cuts really do mean, sitting down and speaking with people who are, here in the community and willing to help people, again, get to, through, and beyond retirement. WelcomeHomeFP.com is the website. Set up a time. It's right there in the podcast description. Made it real easy for you. A lot of financial advisors actually adhere to the 60-40 portfolio, which is 60% stocks, 40% bonds. When bonds collapse under the weight of higher interest rates in the past couple of years, the flaw in that mix really did get exposed. But now the Fed has begun cutting, and Morningstar's Jason Kephart was asked, what is next for the 60-40? Here's what he said.
So I think the trajectory for the bond portfolio is looking pretty attractive, especially from that defensive characteristic. So all the hand-wringing we've done over the last few years about the bond portfolio, I think that's over. I think we could rest easy on the bond portfolio for the foreseeable future. What it means for the stock market, we'll see. Recession fears are out there. Stocks are not going to do well in a recession. And you also have a lot of mega cap stocks like, everyone calls them Magnificent Seven, trading at very high valuations. So if there is a repricing, that can be kind of painful for the 60-40. But I think in terms of like the construct and the philosophy behind why you want to combine stocks and bonds, that's very sound. I think that's in a better spot than it's been since 2021.
I've even heard people go so far as to say the 60-40 is back, which I don't know. What do you guys think of the 60-40 portfolio in any economy?
Well, I think the biggest thing is a 60-40 split. That's very cookie cutter, right? So it just kind of depends on the age and stage, I like to call, for retirement. If you're close to retirement, do you need to take a look at having more bonds in your portfolio? It's possible, but there's other solutions out there. So a 60-40 split is very cookie cutter, and you don't need to have a boilerplate retirement plan, so to speak. You got to make sure, we talk about the retirement roadmap a lot. With the retirement roadmap, it'll take a look at, hey, what do we need for retirement? Let's make sure that we've got assets in place to make sure we can fund our lifestyle. And then anything else is kind of gravy. So I wouldn't tell anybody to get into a 60-40 portfolio, but that doesn't mean that wouldn't be right for them. But we go through our process to see if that is a good solution for them or not.
Just like Tim's saying with, age and stage of life, I totally agree. I mean, if anybody walked in and said, hey, what is the right mix for me? What is the right thing for my retirement? We'd simply tell them we can't answer that question. We need to work through a couple processes with you to understand what your goals, objectives, and then even further risk tolerance are. If 60-40 might be right for you, it might be, but it's not something that you can state is good for everyone, or you definitely we wouldn't be doing our job if every single person that walked through our door had that. I mean, it's got to be tailored, and that's the beautiful thing about working with us is everything that is designed for our clients is tailored to their specific situation. It's not, as Tim said, cookie cutter.
What I would also say is to most people is, we have clients that come in, a lot of engineers that would come in and they have these wonderful spreadsheets that they've been tracking all this time. And they're in their 70s and all of a sudden, they've done well. I mean, they've got a 90% in stocks, but all of a sudden now they're saying, well, maybe I'm a little bit too aggressive. Maybe I'm a little bit too risky. What do you think? And we have to sit down and go through the process with them. And most of the time they are a little bit too aggressive, but they're still comfortable with that. And if that's the way they want to do it, that's fine. But you cannot tell somebody when they walk in the door, because you're 65 years old or you're 75 years old, this is what your mix should be, because it all depends on what you're trying to accomplish. Maybe some people will come in trying to figure out how they're going to pay for their next trip overseas. Maybe somebody's going to come in and say, I don't want to spend any of this money because I don't need it. I've got enough money coming in from other sources and to pay my bills and do the things I want to do. But I want to have everything to go over to our kids, grandkids, whatever. So then we sit down and figure out a way for that to happen. but it all depends on what that goal is. What is that objective that the client has?
And I think it's important to realize, too, that there's more solutions or strategies or investments other than just stocks and bonds. And a lot of people aren't aware of those investments or strategies or whatever you want to chalk it up to be, because they've just saved their money in a 401k for so long or an IRA, and they don't really know, what else is out there. So there's other solutions when you get close to retirement that you could use that you're not going to see in a 60-40 portfolio. So it's important to, seek that advice, because it's all about, like Ralph's talking about, what your risk factors are. There's different types of risk people don't realize, now in the environment that we're living in today, we might have some regulatory risks next year. You never know with a new president. There's things that are going to change. Chris, you talked about taxation. There's a lot. So that always goes back to our roadmap process of, hey, what type of risk are you willing to take with X amount of dollars?
Just being able to understand that, there's so many variables in play for people who come through the door, before they've come in for the first time, and then what their end goal is going to be is going to vary differently. So that question, what is the right blend for me? It's tricky, and I understand why there's not a cookie cutter approach. I'm reminded of another question in the same vein. It is what is the perfect golf shot? Gentlemen, I'm not a golfer, but I know the answer to this. What is the perfect golf shot?
Anything I hit.
Oh, okay.
I was going to say, I got no answer for that, except for it going into the hole in one stroke. That's all I got.
That's the answer. The perfect shot is the one that goes in the hole. At the end of the day, the perfect plan for you is the one that's going to work best for you to make your retirement dreams come to fruition. So you want to have that plan put into place, and that is where the roadmap comes into play. If there are detours on the way, good or bad, or something beyond our control, how do we get back on track and be able to continue on the path towards our goals of getting to, through, and beyond, and enjoying that retirement? And that all starts with setting up that roadmap with the team at Welcome Home Financial Partners. You can do that by going to welcomehomefp.com. You can find out more about Ralph, Tim, and Scott, the entire team at Welcome Home Financial Partners. Set up a time to speak with them, find out more about the First Friday events. It's all there for you, and it is complimentary, and they look forward to speaking with you. Want to thank you for joining us here on this episode of Aspire to Retire with Ralph Short, Tim Short, and Scott Earhart. Hope you have a great day ahead of you. Thanks so much. Gentlemen, as we wrap up this episode here, want to leave you with the final word.
Thank you, Chris. Well, I just figured out the answer to that golf shot. It's the old foot wedge action. So, but, if anybody's listening to this and they are uncertain about what's going to happen in the market, if they're uncertain about their financial future or their retirement, we'd love the opportunity to bring them into the office and create their very own retirement roadmap. So visit our website, give us a call, sign up for a First Friday event. We'd love to see you. Thanks.
All content is for information purposes only. It is not intended to provide any tax or legal advice or provide the basis for any financial decision, nor is it intended to be a projection of current or future performance or indication or future results. Opinions expressed herein are solely those of Welcome Home Financial Partners and Welcome Home Wealth Advisors, LLC. The information contained in this material has been derived from sources believed to be reliable, but is not guaranteed as to accuracy and completeness, and does not purport to a complete analysis of the materials discussed. All information and ideas should be discussed in detail with your individual advisor prior to the implementation. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstance. Advisor services are offered by Welcome Home Wealth Advisors, LLC, a registered investment advisor in the state of Virginia. Being registered as an investment advisor does not imply a certain level of skill or training. Insurance products and services are offered through WPI Holding, Virginia Insurance License Number 138509, an affiliated company. The information contained herein should in no way be construed or interpreted as a solicitation to sell or offer to sell advisory services to any resident of any state other than the state of Virginia or where otherwise legally permitted. Welcome Home Wealth Advisors, LLC, and Welcome Home Financial Partners are not affiliated with or endorsed by the Social Security Administration or any government agency.